Hey, what's up, everybody? This is Evan Carthy from evancarthy.com. Today, we're going to look at three oil stocks: Exxon, Chevron, and ConocoPhillips. The uh, the oil field obviously has been destroyed here the past about 2 months. Price of oil has started to recover slightly as the COVID-19 virus, a lot of the restrictions starts getting people back to work. So we're going to see it start uptaking. But anyways, for these three stocks, I think they all provide decent buying opportunities. Some a little bit better than others, but just want to go over them real quick. So the first one we're looking at right now is Exxon Mobil, and this is one I did a previous video about us pounding the tables on about buying it, especially anytime it breaks under $50, and when it was screeching down to the mid 30s to low 30s right here, I continue to buy it all the way down. And so this is one of the rare stocks I purchased where I just think it's so strong long term, and all these plays are going to be long term plays. The charts we're going to be looking at are either going to be the weekly charts or the daily charts, so these aren't quick scalps or quick flips that I normally trade for my futures day trading. But Exxon's got good dividend for it, and they haven't cut it and I don't think they're going to now. But as long-term play, I think it's really good. But anyways, anytime it's under $50, I think it's a really good buy for it. And basically, what we're looking at right here is we had this big downturn down right here, and so currently it is in a short setup using that pivot point high, this pivot point low down here. So when price hits let me take this off here real quick. Let me just show you how we got down there real fast. Just go over it. So basically what happened is using this pivot point up here, you had that one right there. It kept on going down, 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 down. I'm not going to go through all the points that it hit, but basically when it broke out that trend line right there, then we took the pivot point high from whichever one was over here, moved it back up to the top, and we can see that that became the two-legged kind of measure move down. The A, B, C, D move down, hit the target down there right there. So then we take this one right here that it came from this bigger move right here, and we move it down right there. So that's currently where we're at for the short setup with it right now. It hasn't initiated it yet. We're looking for about $54.97 for it to trigger it. Then if it does, the target is looking for is around $11.88 for it. I highly doubt it's going to go down there and hit it, but obviously I had no idea that the price of oil could go into the negatives for the futures contract, so who knows, anything's possible. But I personally, I don't think that that's what's going to happen. So as you can see, ever since it came down, spiked down right here, and spiked down right here, there's a little gap to fill, and since then it has filled that, and it is starting to go back into an uptrend. So currently, what we're looking at right now, let me get this a little bit closer right there. Currently, what we're looking at right now is we had that move up. There's the high, came down, triggered the trade, hit the 38% Fibonacci retracement level, and so the current exit for this particular setup right here is we're looking at the first target being about $51.14. So it's about $2 away from it currently for this move over here to be considered complete. And then once it does go up there and hit that, assuming it does, then what I'll be looking to do is I will take this low right here, draw it up to wherever the high is right there, and that is going to be the next next move we're looking for. And then if price does come down and really starts breaking out of this trend line right here, then what I'll do is instead of using this swing low right here, I will draw that pivot back down to right here and look for a price to come hit that, and that would set it up, and then the target would become somewhere up right here. And so that's how basically how I trade for it, using the Fibonacci levels, extension levels, and then a little trend line break here and there. But so that's basically what we're looking at for Exxon right now. Current target is about $51.09. For full disclosure, I own Exxon, and I'm not going to sell it at that level. I'm looking for it to rise up into about the at least $70 to $80 level. I mean, you can see that up to about right there and somewhere right in there. I mean, it's got a huge area where it just waffled around in from about 2005-ish all the way till it broke out of here in about this past year, 2020. So I'm looking for price to come back up here, get in here, and then eventually sell it. But I still think it's a good buy under $50 if you're just talking about fundamentally long term. But when price hopefully starts getting up here, at least into $61, hitting that 50% retracement level, then I may looking at peeling some of it back, but definitely not until then. So looking to hold it for a long-term move. All right, so the second one we're looking at right here is Chevron, and you can see again they had a huge sell-off when the price of oil crashed over here. Another extremely good buy if you were ballsy enough to purchase it, when it was screaming down, because it's easy to say buy good stocks when they're getting sold off, but it's harder to do when it comes down to your money, putting your money where your mouth is for it. So what we're looking for is we had this kind of overall trend down, came down and hit the target, and then using this pivot high, which would be the new one up here. This is the current short setup that we are currently in. But as you can see, Chevron really isn't respecting it at all, because the target we have down here for it is about $31.35. Price initiated when hit the 38.2% Fibonacci retracement level, but ever since then hasn't really stopped moving back up to it. So looking on the weekly chart, there isn't long setups for it, but when I looked on the daily chart, it is making a very nice bullish run up, very technical right here. So looking at it, just starting down here, down at the very low. There you have the first one, pivot low, pivot high. Let me zoom in a little bit more right here. Pivot low, pivot high, price hit at 38%. Come up here, hit the target area box. So then we take the pivot low to that swing high right there, get rid of that one, and then price came up, barely missed it, but then here about a week or so ago came up and hit it. So then we use that swing low, this current new swing high for it right here, and what we're waiting on is for price to come back down and hit that 38% level. So we will leave the swing low for the time being, and there's that and that. You can see if that's going to get violated, it's going to go way back lower for it. So depending on when the pullback happens, we just keep following the using this pivot point high swing up for the candle as high as it goes, and just wait for the pullback back down below. So if that is going to be the swing high right there, then we're looking for retracement come down to at least a 38% line right there to initiate the setup, make it live. And then from there, the target would be $102.89. And as you can see, looking up here on the daily chart, you have a little gap right here that's looking to get filled. There's obviously that huge one that just got filled over there. And you have one right up here as well. So a lot of times, majority of the time, gaps like to come back and be filled, which is another reason why. And here's one here in the weekly chart right here. So if this is like some crap stock, some commercial real estate company or something like that, then I wouldn't be too excited about having gaps on a huge downtrend down. These violent moves that they have down right there. It's a piece of crap stock. But whenever coming to like Chevron that has these huge gaps on the weekly chart like that, more likely they're going to go up and be filled. So it's another reason why to really heavily consider looking at Chevron if you are looking at getting into the energy section. And last but not least, we're going to look at ConocoPhillips here, looking at the weekly chart. So currently, this is the short setup that we have right here. You can see, we'll start right here with that move down right there. Came down, hit it perfectly off of it, but then we traced off, broke that trend line, so that is when we moved the pivot point high back up to the highest move part of it, and it never came back and hit the 38% line to initiate the setup until just recently, until about 2 weeks ago. And so it is in a live short setup right here. You see it hit the 38% line, it had a huge gap to come back and filled, and look at that, lo and behold, hit it pretty much to the T, and now it's kind of waffling around in it. There's another little gap back here, but with it, the exit we're looking for it is going to be about $4.69. So if you are bearish in the energy sector, specifically the oil and gas sector, then shorting Conoco here would be a gold mine for you. It's currently at about $44.71. The target we have for it for the short setup is $4.74. Now, personally for me, there's no way I'm doing that. I don't think it's going to go down and hit that at all, but who knows? Maybe did ask wrong about that. But currently what we do have for it is price is in a bullish uptrend. It's hit its first target we have for it. I'm going to say there's the swing high, here's the swing low. Price came back, hit the 38% line, came up here and hit the target area up here. I'll just draw the little target box for it. There we go, we hit it. So now what we do again is take that swing low, go up to the swing high right here, and now we are just waiting for price to somewhere come back and hit the 38% line. Zoom in a little bit here. We're waiting for price to come back and hit the 38% line for this move right here to initiate that trade right here. And when that happens, then we will be looking at getting into it. But as you can see right here, this trend channel is very close to really start being broken, and not just broken in the fact that you have a bar or two close out of it. That's no big deal, but I'm talking about the retracements that come out of it. So when that does happen, what I will be looking at doing for this chart is moving this Fibonacci retracement level down to here, which will take a deeper retracement for Chevron, assuming that the retracement does happen sooner rather than later, because I mean it could, for all intents and purposes, keep on shooting up right here, but currently seeing how narrow this kind of trend channel is for it right here, I do expect that there could be a deeper retracement coming down to it, which would take it out of here and down to this one right here. So definitely something to look for as it's filled this gap right here. It may just start getting ready the next couple weeks loading up, and if there is weakness in Chevron, ConocoPhillips right here, if there is weakness in it, normally I would buy this stock, but again, full disclosure, I have what's called a direct investment account with this. So every month, just a certain amount of money automatically goes into the stock. So no matter what the price is to it, it's just extremely long-term play I have slash kind of like almost investment, although I wish I had chosen maybe Chevron or someone else or Exxon rather than ConocoPhillips, but I did this years ago. So it's through this company called CompuShare. Anyone can join them, and they have plans with hundreds of companies where you can directly purchase their stock every month, and the fee is basically minimal. I think it's like $1 or something like that every time you do it. So if you're looking for something like that, just set it and forget it. Then something I recommend, something I do for it. But if I didn't already do that, then that would be something I was looking for. I would be looking for in a pullback right over here. But seeing I already own Conoco and also Exxon Mobil right there, the only other stock I'd be looking at right now to purchasing, which I really like the stock, is Chevron. So if there is going to be further weakness in a stock, specifically like Chevron or something like that, like say this right here, it Chevron stock retraces, it breaks out this trend line right here, then I would draw, well, let me get rid of that right there. I would draw it Fibonacci retracement level, and price does come back somewhere to about $80 to initiate that setup right there, then that would be a that'd be definitely something I'd be looking at getting it long right there, because I really do like Chevron stock. I actually like it better than ConocoPhillips, and as much if not more than Exxon as well, because they got a very good dividend. But anyways, I hope that helped. That's just 3 of the major oil and gas companies, their stocks, what they're doing, and what I'm looking for in them moving forward. All right, take care and be safe.